Hi, this is Gary Kamen and welcome to Trends and Futures Position Update for Wednesday, March 21st. Today, I will look at metals and energies. Existing home sales in February dropped 0.9%, but held near an almost two-year high. Crude inventories dropped last week by 1.2 million barrels to 346.3 million barrels. And Ben Bernanke told Congress today that U.S. banks could withstand euro shocks, even if the debt crisis there significantly worsened. Does he know something we don't? Currently, the Dow is down 31, the S&P is down 1 3/4, and Nasdaq's up 4. The U.S. dollar is up 110, gold is up 370, silver's up 301, and copper's up 12.5. Crude oil is up 78 cents, RBOB is down 130, and natural gas is down 11. So like every Wednesday, let's start with copper. And we're looking at May 2012 copper. Last week, Trend Trader had no position, had a buy and sell trigger. This week, we've seen some changes in the buy and sell trigger. Currently, Trend Trader is looking to buy on a close above 396.78 and sell on a close below 379.98. You see that right in here. Last week, ADX numbers were at 20. DI plus is over DI minus. It's a weak trending market. Market's in a range. 37.50 here, 39.50 here. Top here is at 4, and the bottom here is at 370, right in here. This week, ADX numbers have even dropped further, now at 18. This has become a weaker trending market. DI plus and DI minus are very close to each other right now, and they're both dropping. Last week, MACD was just touching the signal line with no divergence. After dropping some divergence here, below the signal line, on this move down right in here. This week, MACD is touching the signal line with no divergence. That just tells us there's not a lot of momentum to this price action. Again, the market's in a range. Last week's stochastics were mid-range and coming up. See that there? This week's stochastics are mid-range, and they look to be coming down. Could this be the correction down from 390? Top of the range here? Could be. And copper is down today, 12.5. So the market will have to close over 396.78. For Trend Trader to recommend a buy trigger, 396.78 is way up here, this area here. And the sell trigger at 379.98 is in the middle of this range. That's right in here. So you want to be careful if a short position is taken. Remember, the market's in a weak trend. So this is copper's range it's been in for over a month. You see that there? We'll have to be patient to see when Trend Trader issues a new buy or sell trigger. But just keep in mind, we know the numbers. And after copper on Wednesdays, we go to gold. And we're looking at April 2012 gold. Trend Trader recommended a short March 2nd at 1709.80. Open trade equity as of close March 20th, which is 1647, is a potential profit of $6,280. Second resistance is at 1674.70. That's giving us a potential profit of $3,510. And the buy trigger is at 1756.80. That's giving us a potential loss here of $4,700. Last week in gold, ADX numbers were at 18. It's a weak trending market. The market's in a range. At this time, I'll say the bottom of the range right now is 1640. This week, ADX numbers are at 22. They've come up some with DI minus over DI plus, but this is still a weak trending market. Last week, MACD was adding divergence down. It crossed over the zero on the histogram line, and MACD was bearish. This week, MACD is still bearish. You see that there. Last week's stochastics got back into oversold territory. This week's stochastics are still in oversold territory. Weak trending market, oversold territory, bottom of a range. Technically, what are we looking for? We're looking for a bounce off of 1640 here. Now here's a place where we need to talk about cause and effect, right in here. Now looking at February 29th, if you recall February 29th, gold dropped almost $100 an ounce. And what was the cause of this? And I do believe I mentioned this last week. The cause of this was JP Morgan Chase dumping 15,000 long positions in 1 minute, starting at 10:48 Eastern Time on February 29th. So that caused gold to drop that day. And look at the effect. Gold just keeps on dropping. Here's a red technical trade signal right in here, actually taking place on the day Trend Trader issued this short. That was on March 2nd. And this trade never got into a losing position. See that here? The market did come back up, but never really got up to this area here. And after that, all profits. So right now, Trend Trader is managing $6,280 in open trade equity. Second resistance puts us down to $3,510. Almost 50%, I wouldn't recommend doing. Maybe look at 1665 to get out. That would pocket close to $4,500, or maybe a little higher. All you need to do is adjust your stops accordingly. And after gold, we move into silver. And in May 2012 silver, Trend Trader recommended a short March 6th. And we all remember what March 6th was, a major move down for all the markets. And that short was taken at 32,783. Open trade equity as of close March 20th, which is 31,834. It's a potential profit of $4,745. Second resistance is at 33,391. That's risking $3,040. And the buy trigger is at 36,041. That's risking $16,290. And you know I don't take that kind of risk in any trade. Second resistance is showing risk because of the volatile move down yesterday. You see that there. Now last week in silver, ADX numbers were at 19. It's a weak trending market. DI minus is over DI plus. Market's in a range. This week, ADX numbers are 21. They've come up. Still a weak trending market. DI minus is coming down now below 20 with DI plus. And now I'll say the bottom of the range right now is 32. You see that there. Maybe the top of the range here now is 34. That we'll have to wait and see. Last week, MACD was riding below the signal line, was adding divergence, and was getting ready to cross over the 0 on the histogram line. We saw the crossover on the 0 on the histogram line this week, and MACD is bearish. Last week, stochastics were oversold. This week's stochastics are oversold. Weak trending market, oversold condition. Watch for the bounce off the bottom of the range here. Of course, I prefer seeing the market do this because we're currently short this market. And you can also see here the red technical trade signal taking place the day before Trend Trader issued this recommendation. Now, the day after Trend Trader recommended this recommendation, look at the market. It became a losing trade. If you would have got short just below 34 here, you could have rode this out and caught this move down. But currently, Trend Trader is managing $4,745 in open trade equity. Shoot for taking out $3,000 in this trade. That money's better in your pocket than leaving it on the table. And silver is the last metal I look at, and after silver, we head into energies. And of course, the first energy I look at is crude oil. And now we've moved from April to May crude. And in May crude, Trend Trader recommended a long, February 15th, same day it did that in April, at 102.62. Open trade equity as of close March 20th, which is 106.07, is a potential profit of $3,450. Second support's at 104.04. That's giving us a potential profit of $1,420. And the sell trigger's at 104.01. That's giving us a potential profit of $1,390. Last week in April, ADX numbers were at 24, and they're coming down, becoming a weak trending market. The market was in a range. And this week in May, we see ADX numbers at 16. This has become a very weak trending market. And here you can see the range. Bottom of the range here is actually at 105 in this area here. But here's 106, here's 108 for the top of the range, and here's the high here at 110. Last week in April, MACD was just riding below the signal line with very little divergence. This week, MACD is actually adding divergence. And I'll say MACD right now is bearish. Last week's stochastics were mid-range and coming down. This week's stochastics are mid-range and coming up. But it's a weak trending market. So we can see bounces off of 105 here or 106. And the reason you see second support so close to the sell trigger is because of yesterday's large drop down. You see that right in here? Dropping over $2 a barrel. And the cause there may have been Saudi Arabia saying they can increase production by 25% if need be. So as I mentioned in this trade numerous times, as the market came up and tested 110, there was over $8,000 in open trade equity. That's when you start considering pocketing $6,000, $6,500. You would have pocketed that money and you'd be a whole lot better off. See the range we're in right now? And after crude oil, we're going to move into RBOB, or unleaded gasoline, which is a very hot topic in this year's election. And I'm looking at April 2012 RBOB, or unleaded gas. Trend Trader recommended a long January 4th at 291.94. Open trade equity as of close March 20th, which is 336.31, is a potential profit of $18,635.40. Second support's at 330.04. That's giving us a potential profit of $16,002. And the sell triggers are 330.65. That's locking in $16,258.20. Last week, ADX numbers were at 43. They're coming up, showing signs of strength continuing in this move up. You saw how strong this move up was here back when ADX numbers hit 70. Today we see ADX numbers now at 32. So the trend has weakened. And that's this uptrend right in here from 320. You see that there. And right now the market's playing with 33.50 right in here. You see this line right in here? That's 33.50. You see how the market toyed with that up here? And now the market's playing around up here again. Last week MACD was just riding below the signal line, dropping divergence, and was looking to get ready to cross over the signal line. That didn't take place because what we see now is MACD is actually riding below the signal line with a little bit of divergence here. Last week's stochastics were overbought. This week's stochastics are overbought. Now, if the trend continues to weaken, we will see a correction out of the overbought territory. Remember, weak trending market, top end of a range. We'll see if that takes place. But right now, to me, this is called a windfall profit trade. At this point, $18,600, take out $16,000 and put it in your pocket. I promise you that will feel real good. And I will say this, do not take out less than $15,000 in this trade if you are in this trade managing this kind of money. And many of you might look at this chart and say, look, it's a 1, 2, 3 tops and bottoms. Here's 1, here's 2, here's 3. And that would be true, but look back here in last week's chart. What would this be called? Now, I do look at price patterns, but keep in mind, when they work, they're great. See here? But you better have technical confirmations, because for every one of these that work, I'll show you 5 that don't. And if you're betting your trades on a 20 to 25% accuracy rate, you're not going to be trading very long. Now, I don't like kicking a dead horse, but the next chart I'm going to show you is a weekly RBOB, or weekly unleaded gas chart. And the reason I'm showing you this chart is so you can explain to all your friends why unleaded gas prices are so high. And let's have a look at that. Here's a weekly chart of unleaded gas. Here's the lows here at 250 right in here. And look where we are today at last year's highs. Almost the same time period. You see that here, March, here to May, the market came up. After May, the market came down. So we'll have to wait and see if that takes place again. But here's what's going on right now. Stochastics were overbought for a very long time here, and they could be there just like they were last year. See that there? But what is causing this? I'm going to get rid of this circle I just drew so you get a clear picture. ADX numbers now are at 77. So this is a very strong uptrending market on a weekly chart, and that started back in here. But what's really causing this? Is it really the fact that we have incredible demand for unleaded gas in this country? No, we're at 10-year lows. And believe me when I tell you, there's plenty of crude oil out there. So what's taking place? Well, here's big money. Here you see large spec adding to net longs, and commercials adding to net shorts, and this is on the legacy report. However, a more accurate picture is producers are actually adding to net shorts, and managed money is adding to net longs. You see that taking place? And swap dealers have a small net long position right here. They're not as active in this market as they are in crude oil. And in crude oil, they have a larger net short position than the producers do. But that's a different story. But right now, you see what's taking place. Buying and selling by big money. And if you think I don't know what I'm talking about, check this out. Look at this. Without this taking place, you have no strong uptrend. It takes the buying and selling in the futures market to drive a price up. And that's what's taking place today. But tell your friends not to blame the small speculators like myself. This is being caused by big money. Managed money here and producers. You don't get any bigger than that. So feel free to bring your friends in your home, show them trends and futures, and show them this chart. This tells it all. And after RBOB, we're going to look at natural gas. And now we're moving from April to May natural gas. And in May natural gas, Trend Trader recommended a short March 5th at 24.72. That's right in here. Open trade equity as of close, March 20th, which is 24.32, is a potential profit of $400. Second resistance is at 24.97. That's risking $250. And the buy trigger is at 25.06. That's risking $340. Very tight moves now on natural gas. You see in May, natural gas is bottom here at 2,300. The top at 2,500. You see in April, bottom was 2,200. You see that right in here. But last week in April, ADX numbers were at 54, showing a strong downtrending market. In May, we see ADX numbers dropping now to 40. You see that here. And I'll say right now, this is still a strong trending market, but it is weakening. You see DI minus now over DI plus. Last week in April, we saw MACD dropping divergence, running below the signal line. Now in May, we see MACD actually crossing up over the signal line with no divergence. Last week in April, we saw stochastics coming out of deep oversold territory, but we're still oversold. Here in May, we see stochastics actually correcting out of oversold territory. You see that there? And they're mid-range and coming up. Here you see a red technical trade signal. Forgot to draw the line. That was just below 2,700 here and just below 2,600 here. You saw MACD cross down below the signal line, and you see stochastics actually correcting from overbought territory right in here. That would have gotten you into this trade just a little bit earlier, and you'd be managing some nice open trade equity in this trade. Right now, we have to be careful that the market doesn't break over 250 right in here. If it does that, Trend Trader will issue a buy trigger and get out of this trade. So we're not managing a lot of open trade equity in natural gas currently, but we're also not risking a lot. Adjust your stops accordingly, and for you bottom pickers out there, good luck. So that is what occurred over the past week in metals and energies, and that is it for today's position update. And don't forget to view the TS Analyzer updated by 4 p.m. today. The TS Analyzer will help you not only catch trends as they start, but swing trades as well. And until tonight when Trend Trader issues new trades, have a wonderful Wednesday, and as always, be well, trade well, and follow the trends.